Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. So let's keep going with the technical analysis of the euro currency. Sorry for this delay that I haven't posted the technical analysis yesterday. It just was invented on the wedding ceremony and was a bit late in the evening, so was not able to upload the technical analysis on the forum. But those guys those of you who are reading our reports regular, you already know that if I do not make the mailing, so it means that still report probably at least partially stands on the forum. So you could just check from time to time through the Saturday, and probably will get it somewhere in the middle of the day as usual. So anyway, yesterday we have considered very important fundamental background on the forex market in general for economy. Just showing that it seems that Fed authorities and the government authorities starts to realize what the problems they are dealing with currently. This is definitely not a recession, because recession is a cyclical problem. Well, here is the structural crisis that we are coming to. It will be long term. Jerome Powell tells that, and actually, guys, I'm surprised why the Jerome Powell speech before the lawmakers was really so poorly highlighted in the news. So it's just briefly mentioned that they have made the speech and so on, but they have said very important moments. First, about the structural crisis. Second, he has confirmed that actually the difficult geopolitical situation in Europe, military operation, has no relation to inflationary problems in the United States. So just acknowledge that inflation started significantly earlier than Russia starts the operation in Ukraine. So that was important. It's just because mostly for the United States citizens, for United States people. Anyway, we have discussed in the weekly report on the fundamental part what steps could follow and what does it mean for in general for performance of the central banks across the board, including the Fed. So sometimes in one of the ways it might be irrational behavior when they simultaneously will raise the rates and from time to time to switch on the printing machine, increasing the money supply. So just to avoid hard social reaction on the deteriorating of the financial conditions and deteriorating of the public wealth. So that brings no relief actually to the economy, but this could disguise for some time and from time to time the problems. Also, don't be surprised if you see sudden rally, for instance, on the stock market. That mostly will be a result of this increasing of the money supply. And in general, guys, I would like to warn you that if you see some rally on the markets currently where actually it is not suggested by fundamental background, don't be deceived with that. It might be the trap. So because it very often happens before the crisis, before the final turn of the markets. As you understand, the big investment banks, funds have huge positions of the stocks that they would like to sell. And they are triggering, including maybe using some Fed steps, they trigger temporal rallies that's inspiring households to step in, trying to buy, suggesting that this is a reversal, and they're selling their packs of stocks to the households, to the just common people, closing their positions in anticipation of the market collapse. So, for example, the recent rally on S&P that we see for the 3%, it's one of these traps that usually will be over and market turns down again. The same story on the housing market. So recently it was a lot of euphoria that the new sales have jumped in May, This is great, but this is just single number, guys. If you take a look in general on the real estate market in the United States, you'll see that existing home sales is dropping for the few months, and it stands at the lows for the 2 years approximately. The gap between the rent price and between the house price stands at the maximum and 2 times greater compared to the subprime crisis in 2008. So, as we've shown in our fundamental report, that's no relief on the real estate market actually. So, but all this stuff you could read by yourself. This is not really big report, but few more moments we have mentioned. Now let's take a look at the technical side. As you can see on the technical moments, well, we can't say that your currency has shown some impressive action with this the recent week. You can see this flat standing actually in the tight range. But there are a few important moments that we have to acknowledge here. First of all, these two lows, as we mentioned on the monthly chart, starts looking like a possible tweezer bottom. And tweezer bottom is a short-term bullish pattern. It doesn't mean that market shows global reversal, but it just tells that market could show a bit more extended retracement here to the upside. In addition to the bullish grabber on the weekly chart that we already have there, the overall chances that market could show another swing up, well, stands, let's say that they exist. On a daily chart, the performance right there is also can't be called as a bearish, just because market standing tight, forming some pennant consolidation right below the confidence resistance. Usually this type of action suggests the challenging of this area. Maybe it will be not successful, maybe market will fail to break it, but at least probably it will try to break it up. It will try to test this area. And daily trend also has turned bullish, as you can see by the MACD. And currently, this is some reasons why we are not considering currently taking the short position by far on the daily and on intraday charts. So, because market just could show a bit deeper upper pullback. But there are a few options exist how you could theoretically consider taking the long position if you want. Yes, overall performance of the market, we can't call it as impressive. It's very slow, choppy, but still it is stubborn. And market just trying to move higher. Although we can see a lot of overlapping candles here, we prefer to get this type of action, but we don't have it. And here exist few options for considering taking the position. They are different on aggression degree how you enter the position. If you calculate the swings here, you will see that here we have the extension, retracement, extension, market hits the COP target, retracement, and take a look. What's interesting that this sell-off that was looking strong recently is mostly already closed by the upward action. This is also kind of the bullish sign. Now market stands retracement of the COP. The feature of the COP, this is minor extension, and if market is bullish enough, it usually either shows no pullback on the COP or very small, or just 30%. It is keep chances for ABCD pattern retracement, but and this will not be theoretical destruction of the bullish context, but it makes it very weak, because if market shows deep retracement of the minor target, this is weak scenario, and if it drops back to the C point, well, it makes really significantly lower chances that we will get upward rebounds to the OP. But still, this is first approach that you could follow. This is very conservative. If you get this leg, it will be gradual, not this type of action, of course. Then you could consider taking the position around this area. The advantage is obvious that you could place relatively tight stop just below the C point right here. The disadvantage is that this action might not happen, just you will not enter the position. More aggressive approach if you dealing with the pennant pattern directly. So if you'll take a look at the hourly chart, here is the pennant, and you're suggesting that, well, since market forms consolidation, the challenge of the resistance has to happen, and your stop placement suggests that if market fails to make this challenge, or pennant and consolidation is broken down, then it minimizes the chances for upper continuation and correspondingly, well, let's call it as a destruct the bullish context. In this case, you could place stop right there It's just dealing with the pen and taking the position somewhere inside of it. It's more aggressive approach for trading. Finally, the most conservative approach, if you are taking position following by the two ways that we already discussed, either inside of the pennant or you're waiting for the A, B, C, D, but placing stop below these lows. In this case, you will place stop below weekly grabber, and this is a very conservative approach. But the question here exists that if market somehow will not realize the bullish context, your risk will be, well, rather significant, and even in relation to the possible targets of, even you compare the risk below the A point to the OP, well, it's very close to 1-to-1, or even becomes less than 1. This is negative moment. But placing stop below the lows, you give the market room to breathe, and you're actually placing the stop below the invalidation point of the major pattern, and you will not be washed out just occasionally. So that's few ways that you could act. Probably you have your own ideas how to act with this situation. I think decide, maybe it might be useful to you to make the decision on the trading next week. So that's what we have currently on the euro currency.